August often kicks off the first of 2 months of volatility, and with a big trade that came through in the last 24 hours on the NASDAQ, we need to talk about the next moves as traders and investors. We also want to talk about the beginning of potentially a hyperstock run. We've got the key levels that we need to discuss in today's video, and of course, many big recoveries happening in the last 24 hours. And then we go over to S&P 500 targets raised. What's going on with the earnings data? Are we seeing beats? Are we seeing misses across the board? And more importantly, what are the large flows doing? That and more coming up in today's show. Let's look at it together right now. Well, welcome back everybody to the Daily Show where we talk about markets around the world. Let's give an update of the last 24 hours, and it was continuously being interesting in the energy sector. We're seeing recovery across the board in energies, but more importantly, it's probably going to lead into a very interesting CPI print next week. In fact, I would like everybody to pause the video if you know what's going on with inflation and let me know what you think the next two reads will be. Because as we reported, the Bank of America and many others believe we're about to see a spike of year-on-year inflation numbers. Will that be a catalyst? It's happening on the 10th of August, so we'll need to be paying attention. Let's go through some of the facts that are happening in markets right now. Fact number one, we're seeing huge amounts of calls. In fact, call rates have not been this high since the beginning of the whole crisis of 2022. Basically, in December 21, everyone was buying calls, then markets went bad. Does it necessarily mean it's going to happen? Absolutely not. But you can see the real differences here between when nobody's buying calls and when everybody's buying calls. And some of these will hallmark usually periods of peaks in markets. Interesting point, something we're looking at. We also know that the central bank hidden liquidity is definitely helping to support markets at the moment. With another bank starting to falter and fail, it's become very important that the Fed continues this policy. And we've talked about this quite a few times. In recent weeks, it's upticked again, showing us that basically the central banks are supporting the markets. And at this stage, it's very difficult to see a fall off until really the markets move under some key levels we'll look at later. What about money flows? What are the average members of the community and in fact hedge funds and institutions actually doing? Well, institutions just flipped negative recently. So they went from being positive to negative. Hedge funds have been purchasing mega caps, no surprise, we can see that in price. And of course, private clients have just turned positive in recent weeks. Very interesting. Usually what the private clients are doing often can be considered poor. If you think about 2008, 2009, the crisis periods, of course, there were a few banks that got in trouble for trading against their private clients during the same point. Where are the trends going though? And this is why we bring up ARK at the beginning of today's video. Large caps are starting to flip negative. Mid caps are kind of neutralized and small caps are floating up in a big way. So we're starting to see the ability of the Russell 2000 to outperform become a thing. And when we look at equal weighted S&P, you'll see what I mean later on. But let's discuss one of the largest trades we've seen in a while. We talked about this on Friday. Huge trades on the NASDAQ around these levels. Then near the close, we got another big print. What this is telling us is there is a large amount of trades that are really kicking in around this level. Is it a sell? Is it a buy ready for a new movement through? Well, the good thing is we'll actually see an aggressive move coming off this big range bound section. And once we know that, we'll have a fair idea of which side is in control and more importantly, the level of size that they've placed. Here's an example taken from a while ago that was shared. And basically what it was a huge amount of range bound market as the market coiled and then it exploded out. And of course, the direction was not only large move, but a pretty significant follow through effect. So we'll be watching that in a lot of closeness. Now, if we knew seasonality was coming, we would say, well, we expect this volatility to increase. Well, looks like that's starting to happen. Here are all pre-election years taken over the last 25 years. And of course, here is the seasonal trend, generally speaking, when it comes to the VIX or volatility of the market. This is when we usually expect volatility, large moves. People will sell, people will buy, window dressing occurs, all sorts of things during this wacky earnings season period. Here are seasonal trends over 25 years for just pre-election years, and you can see where we are. We're pretty much about here at this stage. And generally speaking, we would see August act negatively, September act negatively, and then go into a very good kind of October, November, December. Now, if you're a long-term bull, we talked about how the stats were looking pretty good for you And these are just some of the things we've seen recently. But the long-term bulls would look pretty good because remember, it was an 18 times we've got this similar statistic where we had a 20% plus NASDAQ for the first 6 months. And what we found out was that in 17 of those 18 times, we were positive by the end of the year. However, which months were going to be most tough? August and September. So as a long-term bull, should you be terrified? Probably not. But August and September often bring the volatility, bring the opportunity, and more importantly, bring the buy the dip possibilities in the future. Let's move over now to some of the biggest earnings. We saw the beginning of the earnings reports, and of course, that was SoFi and a few others. They did pretty well. Now we've got Uber, we've got AMD, we've got Shop, the American consumer kicking off on Wednesday, and of course, the big ones here, Airbnb, Amazon, and Apple on Thursday. That's going to be a big one. Thursday is going to be a huge catalyst for this market either way. And do remember to have multiple earnings calendars so that you're aware of all of the different levels. So basically all these different stocks, what's coming out, whether they're before market, after market. Don't get caught in a stock not knowing that this information's coming out. It can be brutal and can lead to huge losses. Earnings Q2 so far, what is going on? Beat 625, misses 292 with a beat rate of 68%. Kind of in line, slightly underneath at this stage, usually looking at about 70% at this point in the earnings calendar, but I would say it's in line as much as you could think at this stage. We've also got here from the Bank of America a bit of an idea of what's going to happen in the S&P 500. Should we see a negative 5% EPS growth or a positive 5% EPS growth? Positive 5%, we could be going to, according to them, around a 22 times PE multiple and 5,288. Now, if we go negative 5%, it's more likely that we kind of hover down to about 4K to 4,400. So some interesting levels there. Are we going to see a 3,200? It doesn't look like it unless we go into an absolute collapse. Of course, a lot of people still looking for that. But, this is a very interesting market with the amount of gaps that are happening. We'll talk about that soon. Unusual options activity, as we always like to cover, it was mostly in hyper stocks. We saw a lot of activity in those. The Russell also got a nice shake, 1.2%. SoFi up 19.9%. And then we have, of course, PayPal. We've got Roku. We've got Palantir. So many hyper stocks really just coming across and showing some strength. And we saw that in ARK as well, which we'll look at very soon. Here are the clear sector rotations that occurred. It was a mixture of gold doing well, which we like at the moment. And it was also a mixture of clean energy, metals, and energy. Now, what are all of these? Well, they're all inflation style plays. Now, what this is again showing us is that CPI might be actually increasing. And this has a lot to do with the diesel price or the oil price at the moment. Oil has shot up in a big way over the last couple of days. And I'll actually show you here with this chart what's going on with oil. So here is a chart here that shows you that basically CPI year on year is decreasing. And then we've got here diesel harbor prices are increasing. Now, what happens? Well, diesel often foreshadows, as you can see here, CPI year-on-year change. And at the moment, diesel's flying high and CPI is coming down. So it's highly likely that I think year-on-year CPI has actually bottomed at this point and there's going to be a bit of a spike up. Again, is it a catalyst for sales? I don't even know how the market's going to interpret it. Maybe it expects it. Maybe it's priced in. We'll find out very, very soon, I'm sure. All right, let's jump into the charts together right now and have a look at some of the big charts that we need to be watching. First up, we've got JP10Y, 0.6%. If that hits 0.7, remember, set your alerts. That's going to be a big deal. And if it starts spiking up to 1%, expect the markets to not like that at all. This is a huge change in central bank government policy. And we will be watching JP and we'll probably do a bit of a special on it once we finish earnings week this week, because this is a big deal. Changing the target band from 0.5 to 1, it's not really being thought of as a risk for the markets, but I could see it being a big risk in the future. US 2-year as well continues to hover. It's like inflation trades are back, but US 2-year is not moving at all. And it's just hovering around 5.1%. Continue to set alerts above that. We know that energy stocks are flying. We know that oil is increasing. Let's go over to the VIX. Absolutely no move here. 12.12. We've often considered that that is the last gap fill, and that could be the catalyst for the topping of the market for at least a short period. And we haven't seen it yet, so we're watching. RSP shows us that the market is rotating. It also shows us that we probably need to consider things like those ARK-K stocks. And back onto the ARK-K chart, if we go back over to it, what we're looking for here is a new high close, because we know this is a big weekly shooting star. If we get a new high above this, it's really showing us that breakouts are across the board. But I think if you look at any, and we will pull about 10 of them in a show very, very soon, we're going to look at all the bases. They all have pretty exceptional bases. And again, if the market keeps rotating, I would expect ARK to do well. I would expect hyperstocks to do well, whether you like them or not. And I would also expect Bitcoin and crypto to start to come through in a big way. So crypto people in the community could be very, very interested. Another chart we're watching over this week will be consumer discretionary versus staples. 1/3 of the US economy is American consumerism. We need to see whether that's actually doing well. This is a good ratio to have on your charts for that. If it drops off, it means something's wrong. If it increases, it means continue the rally. Things look pretty good. Treasuries, I've come down to the first level that we thought buyers are at, so always around that 99 kind of level. If it falls through 99, we usually go, in this case, I think, down to fill the gaps in here, which is about 94. But at this stage, holding its own. If it makes it above 104, I'm pretty bullish on treasuries for a trade. At the moment, I just think it's kind of like investment zones. Magma, which is Microsoft, Apple, Google, Meta, and Amazon, is sitting pretty. It's doing nothing. It hasn't broken to a new high, nor has it made a new low. Let's continue now and go over to copper. Now, this one broke out, another inflation style signal. So we were looking at demand destruction the whole time, which basically was a weakening economy / inflation was coming off. All of a sudden, a big trade here for copper. Now, it hasn't held the week above, so it's only the day, but I would think that copper is now going to trade to around 4.12 back up in these highs. So it looks like copper is breaking out, moving higher. And again, it could be showing us that inflation is coming back into this market. So be watching here, but demand destruction, it looks like for now that's on hold and we're going back to 4.12. So an interesting level. Oil approaching 82 a barrel, big deal here. US oil approaching a big zone. And just to put it in perspective, if we take percentages, have a look at this. It's 21.75% off the base. And this was from June. So really, the whole month of July, this is an incredible increase at the Bowser. This is costing us all real money in the economy. It's going to go to lead into inflation. And of course, I would expect the year on year to increase due to it. Dollar index, this one is at resistance, but the last 24 hours was a little bit lackluster for the shorters. This is exactly the zone where we thought the shorters would come through. They pushed it down. They were unable to get to a new low, which 101.25 would have been my break-even level for this. So, of course, stops above here, interesting zone. Looking for it to short off at this area, being the 61.8. That's not really the price action that we would usually see with that. But we'll move over to gold and we'll take a look at that one. Now, this hit our target area for watch this level. Now, this level has shorted so far. That's an interesting point. So if we do end up getting this shorting off, it would probably say that dollar index is going to further strengthen. So gold, although I am bullish on it, I think it could still come back down to the 1925, 1930, 35 area. So somewhere in this $10 range. And I'm kind of expecting this area to be the catalyst for that. Remember, really the difference between good traders and great traders is that you're not necessarily predicting. Instead, what you're doing is you're reacting to the market. So this whole setup was kind of showing that this area here should have trade on it. We've hit that zone. We'll see whether it now holds up to be that shorting kind of area where we expect gold to weaken. And then we come back into this range down here where they built a position. Will they continue to support it? Let's now move over to the central bank liquidity. The traditional way we look at it, both dropped over the last 24 hours as we got new reads in. They're super disconnected. That's why it's so red and so heavily red at this stage. But as we know, that kind of secret liquidity is helping to support the market sentiment at this point. Another chart that I would have on it just to watch sentiment is going to be AAPL. This is a Bollinger. As most of you would know, the middle of a Bollinger is a 20 moving average, simple. So basically, it's the standard deviations away. What you're looking for here is have a look at this 20 moving average. 1, 2, 3, 4, 5, and then a bit of bouncing around here. We're looking for the 20 moving average to get closed below with a red candle. That should probably be the early sign that this trend is over. Apple often is considered the canary in the coal mine for retail traders. If it does end up selling off this week and it busts under that 20, It could mean that sideways or down action is going to ensue for a little period as we go into volatility. So definitely watch AAPL, put a 20 moving average on it and check it out. Amazon is still at what I would consider a second target sell. We talked about this many times. If you're an investor, why would you care? It's still cheap in comparison to where it's been in the past. So that's totally different. But yeah, this was our second profit target. You can see the bouncing wicks here. 1, 2, 3, 4. So many wicks off this level. So 126 is the swing trade change. If it gets underneath there, you're looking for a bit of weakness into probably strength for Amazon. But yeah, 126, super key level, set alerts. If you're a bull, you just need that thing to break a new high and then it'll move towards something like a 144 on the charts. Tesla's doing nothing. It's just kind of hovering between two big moves. Now, what this is it's a coiling market. So because we're coiling and we're doing so into a large move, most likely a large volatile move, we don't know the direction yet. I will be looking for unusual large trades in this coil. And don't worry, I'll report it here on the channel. So make sure to subscribe if you're interested in that type of thing. We'll cover Tesla in great detail. Mark the bottoms and the tops, set the alerts, and probably there's a bit of a momentum slingshot trade there when it occurs. Some markets that are improving that are still really far down, that is got to be China and, of course, technology stocks in China. They've really improved the last couple of days since we heard about that stimulus. Now, I wouldn't be surprised at all, like most of these stimuluses, for it to still hover until maybe October. But this is a huge level. You can see here the inverse head and shoulders. We've talked about it now for quite a while, and we really like this zone. It's not necessarily a trade where it's going to slingshot through because we don't have that momentum yet. But what we do know is it is coming. They're going to do something. And more importantly, it's probably going to be a big deal when it does occur. I would say it's October, but at this stage, very nice levels. And just to put it in perspective of where we're at, even if it did move, and let's say it went this full head and shoulders distance, and we take that as the neckline, you can see it proofs really nicely to those 73s, which kind of points towards a market preparation, which is always a nice thing. The German market closed with a long leg doji. We cover a lot of charts here. We obviously thought this was a Wyckoff distribution. This would have been where the short was. 16K was achieved, break even or take profit for some of the small time frames. Then it just went boom. And I knew when that hammer came back through that the shorts were going to get smoked. But of course, we had to update the next 24 hours. And yeah, it went to a new high. Now, is this a UTAD? Is this a UT and is this a buying climax? I don't know. We don't know that yet. We know that we need to set alerts at 16K in the future. And at this stage, the trend is up and there's nothing much you can really do about it if you're trying to short against it. Oz 200, 2 week rejections. On the surface, based on copper, based on energy, based on financial recovery, you kind of got to like the Australian market at this point. We had to flip from our negative bias here because we saw what we saw down underneath this. We obviously had 69.50 as our target. It got to 7K and then it rejected. It was just too strong. Here, it's difficult to say anything other than bullish because of these 2 rejection wicks. We are looking, of course, for new highs and then that to probably push a new all-time high here on these markets. But yeah, it's got to do with really this increased trade into metals, into energy stocks, and of course, financials. US 2000, 2004. So we closed the day, if we go and have a look at it, we closed the day here pretty much on 2000. Have we broken past it yet? I would say no. But have we got increased volatility and move into the Russell? Yes, we do. So we need to be careful here. 2000 is a big deal. We know how much this has acted as resistance. Here was the original supply. Here it is again. Here it is again. Traditionally, when you have a build like this, it usually does snap and go high because it stopped just before, then it broke out. So you would think that actually the Russell looks pretty good. And to put it in perspective, the Russell is still very far behind. It's only retraced around 50% of what it dropped since the November 21 period. Let's move over to NASDAQ now. We've already talked about this in great detail, but we know there's a huge trade here. We just don't know which direction they're going yet. This little area of coil may look like nothing. Even on the volume, it may look like nothing. But we do know some big players have been accessing some trades in here. Well, I don't know if it's a buy. I don't know what it's a sell at this stage. We will most likely get some big momentum trades this week from this area, though. And then we can ascertain, if you're a bear, 15,400, close underneath that, you can have a little bit of a smiley face. If you're a bull, get a close above the high, move to the next level of equilibrium. And as we've mentioned on this show several times, it's quite a lot higher. In fact, we're probably pushing into that 16,500 potential zone, or 16.4 to 16.5 if the NASDAQ does take another high. Similar for SPX, we've got gaps everywhere. And while we did fill the previous one, we've still got this big gap fill at 45.37. We know that down here, being this level of about 45.28, is where the big bulls sit. They're very happy with that zone. We have a high, we have a low, we have a higher high. Will we end up getting a lower low? We don't know. We have no idea at this stage. The trend continues to be up, but we've got gaps everywhere, and I'll do an update on how many gaps we actually have on the S&P and Qs very soon. It's a pretty big deal. Bitcoin continues to coil. It continues to coil underneath the breakout, so therefore we have to believe that the sellers are still in control to push it towards 28. The thing here, though, 30,400, if it closes above that, I think it's going to make a new high over here and keep going big time. Remember, if we see an advent rise in ARKK, so therefore hyperstocks come back online, they were synonymous with big Bitcoin moves. So effectively, if the market starts to get hyperactive and loves all these risky trades, then we've got to like Bitcoin as well. That's traditionally one of the other markets that goes with it. And maybe that, if you treat it like a stock, maybe it is like a hyperactive stock that's going to give you, relatively decent percentages if you get it right and if you time it correctly. Of course, take your own risks and make sure you control that. Now, what else do we have coming through? Well, we've got JOLTS job openings. So this is this week, Tuesday, August the 1st. We get here JOLTS job openings, ISM manufacturing PMI. That'll be an interesting number. Then we go through to the first non-farm employment change number. We keep going. Got Bank of England coming out, RBA coming out here in Australia. I would say they halt rates. Could be wrong. I don't know. Everyone seems to think they're going to raise them. I would probably say they halt them and then raise them in September. But what do I know? Well, it's just a guess, really, and it doesn't help us as traders. And then, of course, we get non-farm employment change, 8:30 a.m. This is going to be a big one, and that's on Friday. So make sure to watch everything, guys. Make sure to check it all out. If you enjoyed today's show, make sure to subscribe. Smash that like button. We'll see you coming at you with another video. But do remember, large trade went through last 24 hours. We know it's on the Qs. We know we're coming into big earnings, and we know that we're coiling on quite a few important stocks. Check out that Apple, put it on the 20 moving average, and there's so many great indications that we'll get very soon. Bye for now.